Hello everybody, welcome back. So we're going to talk about why I'm sitting out the market for the time being. I've gone through the reasons before. I'm particularly bullish moving into a new bull market, but until a bull market emerges, we might as well just stay out. All right. So we've had a really good couple of months, 2-3 months almost now. We're moving into September. Typically, has proven to be pretty bearish, and that is hocus pocus. Normally I wouldn't normally say, oh, this month is a good month, this month is a bad month, but obviously when the trend is so significantly down, we can only assume that it'll continue to go down. And if previously there's been for the most part a bad September, are you really going to want to try and tempt fate? There is a chance it moves counter to that. That's sometimes the nature of trading, isn't it? I mean, if everybody thinks it's going to go a certain way, it might just rip the other way. It might do. But for me, I'm just quite happy to just chill out for a bit, to be honest with you. Enjoy the rest of the summer, what's left before this horrendous winter rolls in. So this is the deal then for Bitcoin. So first, without looking at the Bitcoin chart, we'll just navigate our way over to oil, which is having a nice retest. This looks bearish on the face of it because it is red candle central, but it's an opportunity for those who haven't gone long. So the best thing that we could hope for now would be a full-on retest of this area down here, this $85 a barrel kind of vibe. This time round, it's better than buying it or longing it within the triangle where we had to fight the resistance. I tried my first long here, failed. Second long here, still in profit, and I will certainly be topping up the longs around here because this time round we don't have the resistance. We can basically bounce straight from the trend line straight up to what I believe would be a major area to take profit on, basically being 104, 105. But there's a very strong chance it's going to go further from there. So it's looking pretty good. So this is, if anything, an opportunity for those who haven't done it. We look at the Nasdaq, completely different story. We got rejected from the trend line and we're stuck within this triangle still. So this makes you think, how's it going to react? Is it going to come all the way back down to the bottom, and is it going to break that support going down to the pre-pandemic top, which again for most stocks has already surpassed this, and for a lot of stocks gone below the crash event in March. So the March 2020 crash. So the Nasdaq's held up quite well. The major tech stocks are the ones that are doing it, the ones that we went long on the everything bounce. Outside of that, most things are wrecked city. And to be fair, even the top ones are probably going to bring this down. Again, it is all to do with Amazon, Microsoft, Tesla, and Apple. That's it, really. That's it. That is the Nasdaq, to be honest. And so it looks to me like it is going to come back down. So obviously the correlation is quite high. If we were to measure this just from where we are right now back down to the bottom of the trend line, that's 11%. If it breaks down to the pre-pandemic lows, 22%, almost 23%. And if it goes down to almost the crash event, that's a 37% drop. All of that you might think is unlikely, but it's definitely possible. It's definitely possible, right? In this continuation of a consolidation, a bear market, a recession, whatever you want to call it, it's trending down. The trend is your friend until the end of the trend, and this is still a downtrend. So the correlation is obviously very high with Bitcoin. So there's a lot of things we can look at here. We are on a log scale at the moment. We have had where were we? We have had this previously, which is still in existence, that we could hope for and beg and pray for a bounce at this particular level. Again, it might not happen. It probably won't, but we could be looking at this. So this is basically some support hopium for the masses. Look, if it works, it works. I've been trading, through thick and thin. I've accumulated many. Well, I don't want to sound too good. I've got a fair bit of Bitcoin that I'm not prepared to sell, but I've got a fair bit of cash, which I'm keeping as cash. I'm not in any way enticed into buying it at these low levels, despite this looking this way, for all the reasons that I've said with the Nasdaq and other reasons I'm going to explain now on the daily chart. So we spoke about the short signal yesterday. That was confirmed. We've got a short signal on the Ichimoku cloud. So just to recap, red portion of the cloud closing below the cloud, the cross, conversion baseline cross, and the Chiku span below the cloud as well. So that's a short signal on a daily. That'd give it up to 2 weeks to play. So we've still got a fair bit of time for this to play out. Below all major moving averages as well. That's not a good look. We'll get rid of this. Some of these things we don't really need right now. And get rid of that, just clear up some noise. Now, you know, in the most bullish scenario that you can imagine would be, and I've got rid of all my trend lines, is that we do have bullish divergence, you know, at the moment, kind of brewing on the daily. It's not much, and it's only 2 drives, and it's not yet confirmed because we've not made a new low. I would wait for a new low to be confirmed to see this situation unfold on the RSI, but you know, even though the money flow index and the RSI have still got it, it's only 2 drives. It's not enough for me to go crazy on. Same thing is going on the weekly, really. We look like we could be forming bullish divergence on the RSI on the weekly. We've never really had that before to mark the end of a bear market. Bear market is due to come to an end, you know, as far as Bitcoin cycle is concerned, anywhere from September to December. So there's a good chance that we put in a significant low, like a capitulation event low, that could yield some decent money. But with the overall vibe with the economy, with oil, gas, inflation, all this kind of madness going on in the world, we've got geopolitical events, we've got everything, all this other stuff going on, plus the demise of things like the euro and the sterling, and that's only going to create a stronger Dixie. With all of that in mind, it can obviously break the Bitcoin 4-year market cycle. We could start to play it out from a capitulation dump, and that could move into, you know, next year. So we could find ourselves at significant lows, you know, whether that's, you know, we'll mark these off now so we can just have some ideas of where this could be. But I am not knife catching, I'm going to tell you that now. So obviously now we can see the $20,000 zone marked off around here, and obviously our previous high over here. So that's fine. We don't need to look at that any further. Other than that, there is a bit of an opportunity around the 16,000 area. So we've got these tops, we've also got this top, and also a breakout and a retest and a move up. So 16,000, give or take 16,005, between 16,000 and 16,005. That is also another area, but we'll get rid of that as well now. And again, this is all highly speculative. We've also got the $14,000 zone, so it's 14,000, roughly 14,000, between 14,005, and that is this previous top over here. We've also got a breakdown from that level as well, and a top and a move up as well. So again, that is one, and probably more likely, if anything, if we start to really break down with the rest of the market, which we've already measured that Nasdaq at a minimum is likely to come down by 12%, then we're looking around 12,000 for Bitcoin. So if we think about what this looks like at the moment, so if we come down to the 16,000, that's 20% down. We come down to the 14,000, that's 30%. If we come all the way down to 12,000, that's 40, almost 41% from where we're at this very moment in time. You think it's all sort of, I suppose, hocus pocus and unlikely. That is the same sort of drop that we found as we got comfortable. I say those who were trading it got comfortable around 6,000, and we found ourselves dumping very quick, very fast to the tune of 48%. So it's not unlikely, I have to say, and it would be rhythmically in line with the way that Bitcoin gives up at the end of the bear market, washes everybody out of the system, and then picks itself back up slowly and accumulates slowly from there. The only thing that's going against us is the rest of all the other markets, like I say, which are working against this chart, right? Bitcoin is weak in comparison to all of those. Then you've got to think about all the things that go on behind this chart, specifically for Bitcoin, like mining. So miners need to profit from their Bitcoin, right? And they have enormous systems. We've got rising electric prices, you know, fuel and electricity, power. All of this is going to go into their factory. Are we going to turn it on, or are we going to turn it off? I mean, at this price, what's the point in turning it on? Why should we mine? What's the point? You know, hopefully it's going to recover, but we're just going to be running at a deficit the lower we go. So what would be the point? You have to think about that as well. So the hash rate disappears, the network slowly not disappears, but shrinks, and I suppose worst case scenario, it completely collapses, and we can turn our Pentium 4s back on again, which would be nice, wouldn't it? Although the Bitcoin price would be like horrendously wrecked. So look, this is all, like I say, I'm not suggesting any of these calamity events, you know, are going to take place, although they're not off the table, and it's all the reasons why I'm choosing to sit this portion of the trading of trading out, right? Not really interested, to be honest with you. Not really interested in shorts either. Now the only thing I'm shorting is euro. We've also got this formation which broke down, which is our rising channel. That broke down, and that is bearish as well. We're below all major moving averages on the weekly and getting rejected from the 7 simple. It's not looking good. It's not looking good. So all eyes on the divergences, I suppose, and let's wait for what could be a capitulation or another event emerge. It looks very likely that we're going to move into a lower range. We established those ranges yesterday, so we'll wait and see where they are without trying to catch knives on all this sort of stuff. The general direction is, to me, pretty obviously going to go down. We could have a run up to 23,000, up to this 200. It would simply just be a trap. It would be a liquidation event for those who are going short at this particular level. It would be effectively manipulation of the price, really, and an opportunity to take a position short if you've got that sort of mentality to do that sort of thing. Anyway, it's not a bullish video today, but there are reasons to be bullish in the event of what would be one of these catastrophic drops in Bitcoin price. And just as I said, I said it yesterday, I said it through the weekend, altcoins are probably going to be your better bet, because fundamentally Bitcoin has reason to continue to go up, but with all of the situation with mining being unprofitable, it kind of renders the model a bit. There's a flaw. There's a chink in the armor there, isn't there? Really. So you've got to think about it like that. Whereas altcoins don't really have that. Altcoins actually have utility. Some of them, obviously. And so maybe, if Bitcoin does crunch down to these significant lows, rather than buying the Bitcoin dip, which would normally be, the go-to point, maybe some of these altcoins, which are likely to stand the test of time, are the place to be. But again, I am not looking to catch knives on this. Maybe if we come down to 12,000, I might do, but I'm still going to have to look at all the other things going on beyond this chart. Long story short, on the short-term time frames, rising channels broken down, short signal on the daily, that's really enough to know that this is going to come down anyway, to create a new low, and then we'll just have to monitor it bit by bit as these things happen. But like I say, for the rest of this month, maybe even for the majority of this year, I'm just going to sit back, going to enjoy my family, going to play some computer games, I'm going to drink some tea, and look back on how much of an amazing environment of trading it has been, even recently, and wait for the next set of setups to emerge, to which at the moment there is only shorts really available, and a possibility to long oil and maybe some energy stocks. That would be about it, really. The rest of it, it's going down. It's going down, unfortunately. So sorry to tell you, but it's worth knowing, because if you want to play this market, you've got to be prepared for lower prices. And you get excited when they come, but at the moment, lower prices for me can go as low as they want to go. Any opportunity, well, I suppose any theory of a price target for a bottom to be put in, I don't think it's really relevant, really. Not at this stage. We'll just allow it to do what it wants and sit back and watch the shit show. Anyway, I'm going to leave with you there. Nothing really more to say about it. But outside of this chat, if you want to join the Patreon, links in the description. Telegram, Discord, I'll be around. This is the last week of the summer holidays, so I will get a fair amount more freedom in the coming weeks to participate in that community. But for the moment, let's just sit back and watch this whole thing fall to bits and see if we can pick up some things later on down the line. Anyway, thanks for watching. Take it easy.